We're live. All right. Happy Saturday morning, everybody. Hope you're all enjoying your post-bank failure weekend. Whew. Okay, so I don't usually do this, a live stream on Saturday. What's going up? So a lot of things are happening. I mentioned on the live stream yesterday afternoon with this collapse at Silicon Valley Bank that things are going to be moving fast. Well, things have moved pretty fast since we wrapped up that live stream. Got to send a shout out to my moderator, Mish, who was with us today. A lot happened overnight. There was a lot of those, imagine the movie Margin Call. There was a lot of those late night board meetings and emergency sessions, and I apologize for the ungodly hour and that whole scene with John Toll that we all know from that movie. Good movie. If you haven't seen it, go check it out. And now this morning, there's a lot of new developments. We have got the Fed has spoken up, and they're going to be moving things around starting first thing Monday morning. And this is information I think you need to know before the opening bell Monday morning, which is another reason why we're doing this live. We have got crypto contagion. You could argue that this bank failure started in crypto when it spilled over, when FTX spilled over into Silvergate, and then Silvergate kind of spilled over into Silicon Valley. Well, now it's spilling back over into crypto. Things are happening with stablecoins. This could be big. And then there's a lot of fallout with Silicon Valley, not the bank, the area, the industry, tech startups. This could be very big for a lot of smaller companies. And if you take the aggregate of this, Mish and I were talking a lot this morning about some of the numbers trying to estimate the fallout, which is very hard to do right now. But even taking some conservative estimates of this fallout, this could cause much larger problems for the wider economy. And that's why contagion is going to be the word you're going to hear an awful lot in the coming weeks and months. So let's bring my man Mish in here and talk to him and shrink my big melon of a head. Mish, how we doing today, brother? We are mute today. That's how we're doing today. I'm going to unmute you or ask you to unmute. There he is.
All right. So, no, man, it's been a great day on the sidelines watching the world burn.
Mildly put. I don't know, the world burns, more of a brush fire right now, right? It's starting, but conditions are very dry, right? And this could very quickly spread, right? So let me just throw that out there, right? Where we're at right now with the size of Silicon Valley Bank failing, and it is a big bank. It's the second largest bank failure in U.S. history, but it is not yet the GFC. Now, we cannot rule out the GFC. We cannot rule out 1929 yet, but we're not there yet, but we're heading that way. And, well, Mish, you did an awesome job over the last couple of hours. I got up this morning. Mish had been gnawing on this bone for hours already, and he's an hour behind me on the in the time zone. So you've been all over this one. So awesome job there. Let's get right into that. First things first, what you're looking at on the screen here, Federal Reserve. Oh, boy. This probably not a very good indicator. Closed board meeting to be held on March 13th, 2023. That's Monday, folks. This just popped up on the Fed's calendar over the last few hours. Check this out. Government in the sunshine meeting notice. Well, doesn't that sound happy and pleasant and lovely? Not so much. Advanced notice of a meeting under expedited procedures. Another way you could say that is emergency Fed meeting. All right, that's what that is. They don't use that word, but that is what we're looking at here. Emergency Fed meeting, first thing Monday. It is anticipated that the closed meeting of the Board of Governors of the Federal Reserve System at 11:30 a.m. Eastern Time, Monday, March 13th, 2023, will be held under expedited procedures as set forth under Section 261B7 of the Board's rules regarding public observation of meetings at the Board's offices at 20th and C Streets, North, blah, blah, blah. The following items of official board business are tentatively scheduled to be considered at the meeting. You ready for this? Review and determination by the Board of Governors of the advance and discount rates to be charged by Federal Reserve banks. They're having an emergency meeting Monday morning, right before lunch, pretty much as soon as they possibly can, an emergency meeting to talk about interest rates. Mish, is this the pivot?
Well, okay, so remember we said yesterday, if it pivots, it's bad. Like something has happened. So I think so first we need to talk about this emergency meeting. It is a closed meeting. They're under no obligation to tell us what happened in that meeting. Our only
Right.
indication will be if they come out and say, "Oh, hey, things have changed."
Yeah, and we don't know if there's going to be a press conference afterwards or not yet. So, if there is a JPOW press conference, that's probably going to be, we'll say, fertile soil for a live stream, but we don't know if that's happening yet. They just quietly threw this up on the calendar. And if it wasn't for FinTwit, nobody would know about this because I haven't seen any news about this. I haven't seen anything on Bloomberg or CNBC or any of the other websites
Well, this
about
comes
this
down
meeting.
to a matter of the contagion, right? If they can prove that it's just Silicon Valley and it's not going to affect other people, they will probably be okay. If they think there's some contagion there, that's where you're right. A pivot's probably a little too much. They may come out with a pause narrative. Let's just kind of leave things where they're at, let everything settle down, and then we'll try
Yeah,
again in a month.
and you have to keep in mind just the action of the Fed announcing this meeting is going to have a psychological effect on markets, right? I always talk about how the market pays attention to the elevation of the fuzzy caterpillars that park themselves on top of Jerome Powell's eyes when he speaks, right? If he blinks too heavily or if he hesitates when he answers a question, it moves markets. So it's kind of like a quantum mechanics. Just the observation of it changes things. Just the fact that they've announced this meeting, they've already changed the dynamic on Wall Street. All right. Moving this meeting up, they're giving themselves the out. They're giving themselves the option to stop rate hikes. They're giving themselves the option of an emergency rate cut right now. And I just want to emphasize giving themselves the option. Nothing has been announced.
Well,
Just
they're
the
giving
meeting.
themselves the illusion that could come,
Yes.
right? And they're very big about small changes here and there. And by announcing this meeting, they're saying, "We got it under control. We're going to talk about it."
Yeah, and this is 11:30 Monday morning, and we're in those modes now where history happens in a span of minutes and hours, not weeks and months, right? I mean, we've been talking about the pivot, how much on this channel, going all the way back last
Since it started.
summer,
Yeah,
since they started hiking.
Yeah.
Yeah. And now the difference between 9 a.m. Monday morning and 10 a.m. Monday morning is going to be bigger than the difference between June and September, as far as what the market is handicapping, what they're guessing the rates are going to be, the interpretation, how far the market could move. To be honest with you, considering the potential fallout, the potential emphasis on this potential, all right, I don't want to be too fuddy here, but considering the potential, I think the moves in markets so far have been very muted, very contained, only a few hundred points combined, right? Did we even move 1,000 points in the Dow this week?
No,
Probably,
not
if you
in a
add them
single
up.
day. Not in a single day.
Yep. And speaking of that, let's look at this one real quick. I bought this chart up before we started. It's the weekend. Everything's closed, so we're not going to have too many charts and things today. But this is the S&P 500 going all the way back to really the beginnings of the bear market at the end of 2021, beginning of 2022, right? And I just did a really rough line drawing here. I announced this stream. I didn't have a lot of time to prep for it, but I kind of connected the peaks of this bear market. And if you look at where we're at right now, let's zoom in here. I mean, we're sitting right on top, pretty much right at that line. I mean, I would call this a support level in the S&P 500. We've now fallen right back to this line that was previously resistance. Resistance becomes support. So if we break through this line, we are right back into this 2022 trend line of the bear market. And I just want to zoom in right here real quick. You see this arrow I drew on February 2nd? That is, I swear to God, Jim Cramer's tweet where he said, I repeat, this is a bull market. The Cramer top. I mean, when he was talking to David Rubenstein at the DC, what was it, the DC Economic Club or whatever, it was that interview he did just after the February FOMC press conference. And right in the middle of that, Jim Cramer said, I repeat, this is a bull market. And within like 3 minutes of Cramer tweeting that, the market reversed and started heading south. And look where we're at right now. We've continued south ever since. And
I would also like to point out our friend, Mr. Cramer, on Friday tweeted out that JPM is a fortress.
Yeah, he loves FTX. He was long Signature Bank, or not Signature. He was long Silicon Valley Bank, and now JPM is a fortress. Do me a favor, Jim. Never say anything nice about my YouTube channel. Okay, please. I don't think that's a problem. I don't think Jim would have a lot of nice things to say about my channel. But and I don't want to turn this into a Kramer bashing session. But man, you gotta admire the inverse relationship at this point. I mean, it's tough to make this stuff up. He nailed the top within like 3 minutes. All right, so we're kind of at a point right now where if this sell-off continues for another day, we're right back into that 2022 decline. If we get a bounce, if the regulators and the banking executives and the press, I would add you, the press is now in on the restore calm mode because they are one and the same. Regulators, bankers, and the press are of one mind at the moment. Stop the panic. If they're able to stop the panic, then we bounce. The Fed could come out and announce the pivot. The market could rally, right? It could happen. Absolutely could happen. But right now we are threatening to break right back into that bear market. All right. Coming back over here, I want to show you guys the CME Fed Watch tool because, man, we're right back to a 50 basis point rate hike for March. Look at that.
You like how that flipped overnight?
That changed overnight. Wow. So the Fed calls an emergency meeting, and I'll be honest with you, I just refreshed the window, and I was expecting this to be inverse. I was expecting to see 20 to 30% likelihood of a 50 basis point hike. We're back up to 68% right now. Did I miss a soundbite from somebody somewhere, some Fed governor?
No.
I find that shocking. And all right, well, let's move on a little bit. Zero Hedge tweeted this one out. Mish found it. Good catch, Mish. This is showing the implied rate hikes or the implied Fed funds rate over time. And these are snapshots starting on March 9th, which was Thursday, right? This is what the target Fed funds rate was predicted to be at. It was predicted to go up to just above or just below 5.5%. Right, and then they were predicting slowly a resumption of rate cuts around the end of the year. That was Thursday. Now look at the difference between Thursday and Friday at 10 a.m. Look at how the market immediately started to price in a more dovish Fed towards the end of this year. Now that's the difference between Thursday and Friday morning. And then look at Friday night, how now we've got a lower peak rate, and they're saying by the end of this year, 1, 2, 3, 4 rate cuts by the end of this year now. So that's why the pivot talk, it's back. If this continues, and again, it's still very early, but if this carries on, then the pivot is on the table. And like we've been saying for a while on this channel, if you get the pivot, it's not a good thing. That means something is broken. And you know, we've been saying the Fed is going to hike. They're going to raise rates. They're going to tighten until they break something. Yesterday, they broke something. That happened. They broke Silicon Valley. They broke Silly Bank. By the way, I have a really hard time with my SI banks, Signature, Silicon Valley, and what's the other one?
Silvergate.
Signatures and Silvergate. All right. So I'm just lumping the three of them together.
Silvergate closed their doors.
Yep.
Silicon Valley failed.
Yep.
And we have a beginning of a run on Signature.
Yeah. A lot of people claim Signature could be next. So I just lumped the three of them together, and I just call them Silly Bank. It's just easier for me to remember because you'll notice every time I mention one of these banks, I have to pause, and I look up into space, and I grab the right name. I want to be careful. I don't get the names of the banks crossed. So if I'm lazy, I'll just say Silly Bank. I'm just talking about one of the three. I want to send a shout out. Thank you, Mr. AK, for the super chat and the support of the channel, sir. He says, "What's that chart? You finally found TradingView." Yes, Mr. AK. I have been using TradingView a little bit more and a little bit more. And I got to send a shout out to my man, Brian Zarb from the technicalchartist.com. Brian's been on the channel before, and he's always in the chats, and he's always sending me links and stories and things. Brian took time out of his day. And, you know, Brian lives in Malta. He's on the other side of the world. So he coordinated with the time differences and everything. And he spent like 2 or 3 hours showing me TradingView, just demoing the interface and the possibilities and everything. Fantastic. Really, really nice guy, really sharp. And he took the time to show me TradingView. So if you see me using TradingView charts now, you can thank Mr. Brian Zarb from the technicalchartist.com. highly recommend that website also. Brian's got a lot of good things to say. So thank you, AK, for the support of the channel, sir, very much. And thank you, Brian, for teaching me TradingView. And Dakota Prairie, what's going on, Dakota? Thank you, sir, for the super chat and support of the channel. He says, I love your channel. Well, thank you, Dakota Prairie. I love you guys. You guys are awesome. The Melon Heads, you guys are the most amazing people in the world. I love doing this. I want to do this forever. I love this YouTube channel. So thank you guys very much. Appreciate the support of the channel and everything. And by the way, let's move on to this one. All right. Because, oh, there she is. There's my girl, Maxine. Yep. There she is. Where is it? Hold on. I got Maxwell. You want to give the internet a heart attack? Hold on. I have this thing. We can give the internet a heart attack. Whoa, there it is. Yep. Yeah. I've been waiting to bring that one up. Oh, Maxine does not approve of what we're saying here on Nobody Special Finance. Let's get that out of here with all available haste. U.S. lawmakers met with Fed, FDIC to discuss collapse of Silicon Valley Bank, according to source. I love this. This source guy, he really gets around. There's two people that apparently know everything, Mr. Source and Mr. Familiar with the Matter. These guys are everywhere lately. So I don't know who they are, but apparently they've got a direct line to every newspaper in the world, Mr. Source and Mr. Knowledgeable of the Matter. So, I'm sorry, Mr. Familiar with the Matter. Yeah, don't want to get the name wrong. Folks, list your sources. Name your sources, please. Rep. Maxine Waters convened meetings with federal bank regulators in the wake of the bank's collapse. U.S. lawmakers met with the Federal Reserve and the Federal Deposit Insurance Commission on Friday to discuss the collapse of Silicon Valley Bank. And this is what I was mentioning, folks, these midnight meetings, these late-night board meetings. This is happening all over the economy right now. Rep. Maxine Waters held briefings with officials for the two federal bank regulators, as well as the Treasury Department late in the day, hours after California Department of Financial Protection and Innovation took over the bank and turned it over to the FDIC. Lawmakers from both major political parties were present at the meetings with regulators. A person familiar told CoinDesk. Again, no names. Nobody's willing to put their names out there these days. A number of lawmakers expressed concerns after SVB collapsed early Friday, including Waters. I'm going to read a little bit of a quote here. I'm alarmed by the failure of Silicon Valley Bank, which marks the second largest bank failure in U.S. history. This sounds like a prepared statement. I'm closely monitoring and convening committee members with regulators so myself and members can understand the latest around the closure of Silicon Valley Bank by the California Department of Financial Protection and Innovation and the Federal Deposit Insurance Corporation appointed as receiver. Okay, they're getting into political platitudes here. We don't need to get into much of this. In the statement, the FDIC said it would provide uninsured depositors an advanced dividend and a receivership certificate. That's kind of interesting. An advanced dividend and a receivership certificate. I don't really know what that means. You know, what's an advanced dividend? Does that mean shares in the new bank, a receivership certificate, an IOU from whatever's left? IOU a place at the table to pick at the bones of Silicon Valley Bank? I don't know. Companies that banked with SVB may have difficulty meeting payroll. Put a pin in that. We're going to talk about that one in a little bit. Checks or wires initiated right before the bank's collapse may fail. And we've got stories about that all over the economy, about wire transfers, people trying to get their money out before the failure, and they didn't get out in time. All right. And, I did that spontaneous live stream on Thursday about, hey, bank stocks are getting crushed right now. Something really bad is happening, and the press was silent about it. Why was the press silent about it? And I'm going to get a little tinfoil hatty here. I think they didn't cover this story because they gave their buddies time to get their cash out first. They didn't want to cover the story because everybody would have got in line to get their money out, and their buddies would not have got their money out. And it wasn't until after I went live, it wasn't until after FinTwit and FinTube started covering it, did Bloomberg and CNBC and everybody else finally even mention this freaking story. They had to give their buddies time to get out. And there's one guy in particular who really, really grinds my gears. Somebody said I look like Peter Griffin the other day, so I'm going to say grinds my gears. But there's one guy in particular who is a frequent flyer on CNBC, and he's out on Twitter today. We're going to have a little talk about him, about Mr. Ackman. Put a pin in that, man. We got a lot to talk about today. It's Saturday. Things are happening fast. Let's move right on here. All right. Contagion. This, before we get into the contagion, I got a couple of you guys I got to get to. But contagion risk, oh boy. Yes, there is contagion risk, and it is already starting to show. So we gotta back all the way up to just after Mr. Dakota Prairie. God, you guys are everywhere today. There you are. I want to make sure I don't miss anybody. Jose Orozco, what's going on, Jose? My man with the Bucky's Corn Nuggets. Sup, Jack and Mish. Jay Bravo has pointed out that historically Fed pivots are a precursor to the crash and eventually bottoms. Then comes the mega rallies. That's an awesome point, Jose. Thank you for bringing that up. And, we've talked about this a little bit on the channel, guys. All the people, I called them the pivoteers, right? All the people who are saying the Fed was going to pivot any day now. And I kept saying, no, they're not. They're going to keep hiking. And I said, and if you're right, even if you're right and you get the pivot that you think you want, it's not the pivot that you want for exactly the reason that Jose and Mr. Bravo were talking about. Because when the Fed pivots, it usually means something broke, that something really bad has happened. And it's an act of desperation. And that doesn't mean your calls are going to perform well. That means something broke. Your calls are already worthless by the time that happens. So that's a great point, Jose. You're right. The pivot is a precursor to the bottom, but the pivot does not mark the bottom. Bad things continue happening after the pivot. All right. And remember, the Fed sees more than we see. So whatever we're seeing, whatever we're talking about, and the contagion and this fallout and this many billions here and here, the Fed has a better look under the hood than you do. All right. And the Fed looked under the hood last night and they saw something that freaked them out. And they said, call that emergency meeting for 11:30 Monday morning. All right. So I don't think we're done with this one yet. Even if they announce the pivot, maybe we get a short-term rally. But this story, the fallout from this, the contagion from this is going to play out over weeks and months. The bottom is not in yet. Definitely not. Thank you, Jose. Awesome comments, sir. And thank you once again for the Bucky's Corn Nuggets. Those things were delicious. Dan Hedin. Thank you, Dan Hedin, for the super chat. He says, Saturday, I had to go look at a calendar. It is a better weekend now. Yeah, we don't usually do this, guys. We don't usually go live on Saturday. There's usually nothing to talk about to go live on Saturday. But, this is different. We're in that mode right now where history happens in hours and minutes, not weeks and months. So things are moving pretty fast. And we're going to try to stay on top of this story. I don't know if we're going to do this again tomorrow. Maybe we'll do a short video update. It depends on the pace of things and how many new developments come in. And by the way, on that token, I got to send a shout out to Dan, who's also one of my Patreon supporters. Thank you, Dan, very much for your support of the channel on Patreon. And everybody else who supports the channel, either directly through Patreon or through Super Chats, or indirectly, you guys who are out there on the Discord, you guys who send me emails and links and Twitter DMs, all right, this whole network that has sprung up around the channel, right? Everything we're looking at right now was sourced one way or another through that network. So all you guys, thank you so much for everything you do to support the channel. You make this channel better. This is every bit as much you guys as it is myself and Mish. So thank you very much. And thank you, Dan. Yes, sir, it is Saturday. Warrior Lady, great name. Warrior Lady, the shield maiden of FinTube. She says, SVB is a bad player. Is a true capitalistic system, bad players should be taken out. In a true capitalistic system, bad players should be taken out, not bailed out. I do agree. I don't think bailouts are a capitalist thing, okay? And that's, you're going to hear this in the future, guys. This is a great point, Warrior Lady, and a great name, by the way. I hope you don't mind me calling you the shield maiden of FinTube. I'm picturing Lagartha right now, especially with the euro next to the super chat. I'm picturing Lagartha from Vikings right now. But bailouts is not a capitalist thing, all right? Bad decisions do not get rewarded under capitalism. Actually, bad decisions are penalized under capitalism. When you make bad decisions, you don't thrive under capitalism, and that's why capitalism is the superior system, because bad decisions go off and die in the graveyard of bad decisions. Good decisions thrive. All right. People who make good decisions should not bear the financial penalties of people who make bad decisions. That ain't capitalism. So I do agree here that they shouldn't be bailed out. 100%. I don't think banks should be bailed out. I also don't think people who the only bad decision they made was putting their money in Silicon Valley, I don't think they should suffer the consequences of that. They don't deserve that. Okay. The only thing they did wrong was not catch my live stream in time on Thursday afternoon to get their money out of the bank before, all the bigwigs who are buddies at CNBC before they got out. And I guarantee you somebody at CNBC or Bloomberg, somebody in the financial press held that story for at least a few hours to give their buddies time to get out. I guarantee that happened. I can't prove it, but I'm telling you. Go ahead, Mitch.
Peter Thiel came out and said Thursday night, pretty early in the evening, that he was pulling everything of his out. Yep. So that kind of knew something was wrong then.
But you know, Peter Thiel's the kind of guy, he tells you after his money's out, right? When he said, I'm pulling my money out, Peter Thiel did not make that announcement until his money was already out. Yeah. All right. Just like when
he had the common decency to warn us a little in ahead.
Yep. Which, by the way, you know, we're going to talk about insiders and things and trading. They should have to make these announcements. Certain people of a certain threshold, because they have access to information that the general public doesn't have access to, they should have to pre-announce their trades. I think that's a level playing field. When you have insider information, a CEO should not be able to sell stock and then go out after the fact and say, I sold stock, right? That is insider. Whether he discloses after the fact or not, he shouldn't be able to do that. He should have to say, Thursday night, tomorrow morning, I'm going to sell stock. And then his other shareholders have a chance to front run his trade instead of the other way around. All right. This is a if I ruled the world scenario. This is how President Melonhead would run things. But I'm sure there's a million constitutional errors in what I just said, and I'm sure the libertarians could jump down my throat on all the reasons why that's a terrible idea, which is what libertarians love to do. But hey, that's just my idea. We're just thinking out loud here. But yeah, they shouldn't be bailed out, and they also shouldn't be bailed in. I don't think the clients of SVB deserve this. All right. And, you know, I'm a perma bear, and I've been saying this is going to happen. And I'm always like in the back of my mind, you know, I have that voice saying, contain your enthusiasm here. Let's remember what this is. This is people's lives being ruined. This is people's dreams being destroyed, right? If you're some guy in a tech startup and you have worked to build a multi-million-dollar company, and now you have 50 or 100 employees at your company, and all your venture capital funding just got frozen out and is probably gone now, right? Your dreams, your work, your effort is destroyed. Your people are not going to get paid. Your customers are not going to get paid. You don't deserve that. They don't deserve that because Silicon Valley Bank made stupid decisions. So anyways, that's my rant. But I agree. It's not a true capitalist system. Bailouts are not capitalist. So when you hear people talking about how this is another reason why capitalism is such a bad idea, this is not capitalism. Bailouts are not capitalism. And, you know, I'd love to talk about how the communist governments are faring right now, but most of the communist governments have already collapsed. There's only a few of them left. So, you know, they're going to advocate communism in the next breath after they talk about how bad capitalism is. But nah, you guys know how I feel about communism. I think I got everybody in the super chats. Was that the last one? I think that was the last one.
You're caught up.
All right, so let's talk about contagion here. This is a big one. Stablecoin USDC breaks dollar peg after firm reveals it has $3.3 billion in SVB, Silicon Valley Bank exposure. This is a big story, guys. I mentioned at the beginning of the stream how you could argue that this banking collapse started in crypto, right? I mean, really, it was the Fed that triggered this collapse with rising interest rates. And the most fraudulent, the most risky fail first. That was the crypto trades, right? That was FTX and Celsius and Terra Luna. They all failed first. Now, they have stressed the banking system. They took down Silvergate. Silvergate is still supposedly solvent, by the way. And then Silicon Valley failed afterwards. Now, crypto didn't take down Silicon Valley. Silicon Valley was kind of unique. But now because Silicon Valley is going down, USDC, that's the second biggest stable coin in the world. They had $3.3 billion of their reserves at Silicon Valley Bank. Well, now USDC is losing its peg to the dollar. And I think Silvergate Bank is playing a role here. Not Silicon Valley Bank, Silvergate Bank. This is me speculating. But the Silvergate Exchange Network is going down, and I think the Silvergate Exchange Network not being there right now is one of the things that's causing USDC to lose its peg. And this is big because this is billions of dollars. Now there's a run on crypto. This is a run on the bank at USDC. Let's talk a little bit about this article here. The U.S. cryptocurrency firm Circle's USD coin lost its dollar peg and fell to a record low Saturday morning. The company revealed it has nearly 8% of its $40 billion in reserves tied up at the collapsed lender Silicon Valley Bank. USDC is designed to trade at $1, but it fell below 87 cents on Saturday, according to data from CoinDesk. Now let's look at this. This is USDC right now. All right. Now this thing is supposed to be 1.00, and it's not supposed to go more above or below that. It started to get a little wonky yesterday. It was trading at 99 and a fraction. And Mish, we were talking about this yesterday. We didn't go on the air, but you were onto this one when it was still like 99.8 cents. And now we wake up this morning. It got as low as 87 cents, I think the article said. It's back up right now. It's back up to about 95. All right. Now, historically, there has been arbitrage opportunity here with USD coin. If the coin dropped a fraction of a cent below $1, you should be able to take your dollars, buy USD coins, take them over to another exchange, and sell them for a full dollar, collect the difference, right? A fraction of a cent. But if you did it a few million times, it added up to points. You could buy these and trade them, redeem them for a full dollar, right? So on the surface, the way it would work right now, you should be able to go buy USD coin for 94 cents and then go to Circle and redeem it for $1 and make 6 cents. And then you bring that dollar right back over to the exchange and you buy another USD coin for 94 cents and then you redeem it again for $1, another 6 cents. And if you can do it fast enough, you make money. You make a lot of money. And just the act of that arbitrage trade should bring the value of USD coin back up to $1. So in a lot of ways, the arbitrage traders act as almost an FDIC for stablecoins, because as the value drops, they step in to harvest that arbitrage. They bring the value right back up. It's a way of backstopping the value of these coins. But remember, the Silvergate exchange network is gone now. The SEC took it. They killed it. Silvergate is going down. Again, I'm getting my banks right. Silvergate, yeah. Silvergate exchange network was basically an instantaneous 24/7 way of moving dollars in order to facilitate crypto trades. That's how Silvergate Bank made their money. They were a crypto-centric bank. And other than that, the only other way to move dollars has been like ACH transfers, right? They take time, especially on weekends. ACH transfers don't work on weekends. So if you're an arbitrager right now looking to arbitrage USD coin, you can't rapid fire arbitrage these trades. You can't go buy 95-cent USD coin, convert it to $1, and then lightning fast bring your dollar back to the exchange and do it again and do it again and do it again until it balances out. Now you have to wait for ACH transfers. We have to wait for the traditional banking system. It's going to take forever. So I think the fact that Silvergate Exchange Network is gone is playing a role in USD coin not being arbitraged back to its peg right now. So you take that, it's harder for the arbitrage traders to maintain the peg, and combine that with the story about Silicon Valley, and now people are rushing to get out of their USD coin, and so the value is dropping, and there's no arbitrage traders to step in and maintain the peg. So this is a vulnerability of stablecoins. A lot of people have been sounding the alarm on stablecoins. Now, we all thought it would be Tether that would fail first. And isn't this like the punchline of a sick joke that Tether might be the last man standing in the stablecoin space? But right now, USD coin, it looks like it's regaining its peg, or it's at least heading back in the right direction. But
if you look at it, the amount of market cap it has lost is the amount of money that got stuck in Silicon Valley. It's down about $3.5 billion.
It's 43.6 billion roughly, or 43.5 billion on the 10th, and right now the market cap is at 38.3, about 5 billion.
Yeah.
And it was as low as 36 billion. So I mean, this is a bank run on USD coin. Now, USD coin is not a bank, but it's a panic. It's people rushing to dump them for their dollars, get them out of there. So, I mean, it basically is an unregulated bank. So, this is contagion, folks. This is the fallout from Silicon Valley Bank spreading back into crypto, and billions of dollars just evaporating overnight. And, well, here we go. Coinbase. This is on Twitter. They just put this out. When did this come out? 10:40 p.m. last night. Coinbase, we are temporarily pausing USDC to USD conversions over the weekend while banks are closed. Remember, that Silvergate Exchange Network is gone. During periods of heightened activity, conversions rely on US dollar transfers from the banks that clear during normal banking hours. When banks open on Monday, we plan to recommence conversions. So this is kind of a withdrawal halt. It's not it's not a pure halt, but Coinbase is saying we're not going to let you convert your USD coin to dollars until Monday morning. So what? I don't know. Am I interpreting this wrong? Is this a halt of withdrawals, Mish, or what? What are we looking at here?
It is. It's a very targeted halt of withdrawals, but what it's not allowing that function to occur right now.
Yeah, and this is not just Coinbase is doing this. We saw this at Binance, right? Binance did something. They halted USD to BNB
conversion. Yep.
And it had something to do with their BNB token. A little bit of that went over my head. I'm not going to lie, but this is also something similar is going on at Binance right now. So the exchanges are kind of circling the wagons around USD coin. They're halting redemptions of USD coin on their exchanges, and that is allowing USD coin to not have to halt withdrawals themselves, right? If you take away Coinbase, you take away Binance, you just cut out a major swath of the market that can no longer redeem USD coin for dollars. So it's basically a worldwide halt on redemptions of USD coin. All right, so that's going on right now. And here, this is Circle themselves. Circle, who owns USD coin, they're saying following the confirmation at the end of today that the wires initiated on Thursday to remove balances were not yet processed, $3.3 billion of the $40 billion of USDC reserves remain at SVB. So this is Circle is saying we tried to get our money out of Silicon Valley Bank. We couldn't. They failed before we could get our money out. Again, the big guys got their money out first. The press was quiet about it. Circle did not get there in time. They got the memo too late. Like other customers and depositors who relied on SVB for banking services, Circle joins calls for continuity of this important bank in the U.S. economy and will follow guidance provided by state and federal regulators. That almost sounds like a call for a bailout, doesn't it, Mish? Like other customers and depositors who relied on the bank, they're calling for continuity at this important bank and will follow the guidance by regulators. It sounds a little bailout-y, doesn't it?
It does.
Yeah. You're going to see that. You're going to see a lot more calls for bailouts in the days ahead, folks. A lot more calls for bailouts.
You're already seeing it. And my response to that is, if you want a bailout, the first thing you have to do is you have to go in and change Dodd, and then you have to get a secondary law through allowing you to bail out the bank. So this is not a short fix.
And let's be honest, say what you want about Dodd-Frank, whether you were for or against it. Dodd-Frank was put in place to prevent bailouts. So everybody was okay with Dodd-Frank when no one needed a bailout. And now that they need it, quick, change the rules. The rich guys can't lose money. Right. And it's not supposed to work that way. Not supposed to be able to change the rules the second they don't favor you. That is not a level playing field. All right, let's see what else we got here. We moving on.
You want to talk about payrolls?
Let's talk about. Well, this is a good lead into payrolls. This is from the Kobayashi letter. All right, and then this came out not too long ago. This was this morning, or about an hour ago. Current list of companies with Silicon Valley Bank deposits. We've got Circle, who we just talked about. They're the owner of USD Coin, $3.3 billion. Roku has $487 million at Silicon Valley Bank. BlockFi.
That is 26% of their operating capital.
How much percent of Roku's?
26.
Ooh, that's going to hurt Roku. And Roku's probably, I don't follow Roku that close, but they were one of those meme stocks that exploded in the early days of the pandemic, and now they're just a shadow of their former glory. Check this one out, dude. BlockFi. Ooh. Well, BlockFi's already belly up. I mean, they're in bankruptcy court. So now, already BlockFi customers are getting hosed. They're going to get a fraction of their money back, if anything. Well, there's $227 million more dollars that BlockFi customers may not get back. So, oh man. Roblox, $150 million. Ginkgo Bio, $74 million. iRhythm, $55 million. Rocket Lab, $38 million. Sangamo Therapeutics, $34 million. Lending Club, $21 million. Payoneer, $20 million. And the worst part, this is according to the Kobayashi letter, which is a great feed, by the way. You guys should be following this one on FinTwit, the Kobayashi letter. The worst part, these are only the companies that have disclosed their exposure so far. SVB had nearly $200 billion in deposits, with 97% of those deposits above the $250,000 FDIC limit. So these are just the companies that will admit to it as of now. Now, I don't know how much cash. You mentioned it was 26% or whatever of Roku's operating capital. BlockFi's already belly up. But how are these companies going to make their payrolls? How are they going to pay their employees if their money's frozen in orderly liquidation authority court now? Some of them won't be able to. They're not going to be able to pay their employees. Put a pin in that one. We're going to be right back on that topic. Now, let me make sure I didn't miss anybody here. I am going to where are you, Devin? I know you're in there. Mr. Devin Bryan says, what is the likelihood that this banking thing goes systemic? And if so, what will be the time frame? Maybe somebody out there can mathematically quantify the likelihood of this going systemic. I'm going to use this analogy. Mish and I were talking today on the phone. I'm going to use the same analogy. Say we're in a football stadium, right? 80,000 people in this stadium, and we're sitting and we can see across the field on the other side of the stadium, there's 50 people stampeding out of this one section. That's what we're seeing right now. That is Silicon Valley Bank has failed the run on the bank. Those 50 people stampeding, those were Silicon Valley's customers. Now, we can sit here in the stadium and we could say, oh, look, there's only 50 people stampeding. It's not that big. We're fine. And at this moment, that is accurate. Now you notice the person next to you quietly gets up from their seat and they start walking away. Now you're on the other side of the stadium. There's 79,950 more people in the stadium right now. And now you start to see one person quietly get up and walk away and then another. Are you going to get up and leave? Are you going to say, yeah, the stampede doesn't affect me. I'm just going to sit, or are you going to stay in the stadium? And what do the other 79,950 people in the stadium do? There's no way to mathematically quantify that. And all I can tell you is every person who gets up and slowly starts walking out brings you closer to that all-out panic. What triggers it? What is the straw that said, boom, everybody starts stampeding, climbing over each other? There's no way to model it. All right, we're now into emotional territory here. It's no longer a numbers game. It's no longer, here's the balance sheet, here's the assets, here's the liabilities, because the psychological phenomenon of the panic now is changing those assets and liabilities so fast that there's no way to just take a snapshot and say, this bank's vulnerable, this bank is not, this bank will definitely be fine. Right? Because as people start pulling their money out, and it started in Signature Bank and it moved to Silicon Valley, right? Silicon Valley was okay until so many people pulled their money out that they had to do this $20 billion sale of assets that happened. It was either late last week or early this week. They had to sell $20 billion of assets in order to redeem withdrawals. Well, the act of that sale lowered the asset values. They lost $1.5 billion on that sale. And then they announced that they had lost $1.5 billion on that sale. So it's still not a run, right? It's a lot of withdrawals. The bank is under stress. But they announced that they lost that $1.5 billion on the sale and that they were going to have to raise capital, that they were going to dilute their shareholders. Uh-oh. So now people have seen on the other side of the stadium, a couple people got up and walked away and some bad things happen. Peter Thiel comes along and says, I want to get my money out. I want to get my money out too. I want to get my money out too. Right now, you've got $40 billion in deposits have been yanked out of this bank. Now people are dumping the stock in the bank. Now the bank can't raise that capital because the stock isn't worth enough. Now they have to sell even more assets because even more withdrawals are happening. Now the problem has taken on a life of its own. The bank fails. They're done. They go into FDI receivership. Now there's banks that were okay heading
we need
into...
to talk about Diamond's kind of culpability in this right here, right? In the story.
That's a good point. Yeah.
So when Peter Thiel came out, right before, JPM Diamond came out and said that we want to welcome everybody from Silicon Valley into JPM. We're a good, strong bank. Basically, he becomes the one. People come over here and exacerbates it a little. He's not the reason for it, but I do think he has some culpability in it.
Yeah, he saw an opportunity to capture market share, and so he almost added to it, didn't he?
Yeah.
Who does that sound like? Who didn't you mention somebody similar had done? Somebody had
Yeah,
done
I
something
kind of
similar.
equated him to being the CZ in this failure.
That's right. In the early days of the FTX collapse, CZ was saying, "Hey, we'll take FTX customers over here at Binance. We'll gladly take that market share from Sam Bankman-Fried." Which I maintain that I think CZ is the one who engineered the collapse of FTX all along. I really think he was the original source behind that CoinDesk article. I can't prove it. It's just me theorizing here, but I would not be surprised to learn that. So yeah, you're right, Mish. I mean, some of the other banks saw an opportunity to take advantage of it, and they shot themselves in the foot because by stoking the fires, the panic grew beyond their control, and now it's blown up in their faces too. Now, J.P. Morgan stock was down 5.5%, 6% Thursday afternoon. So it hurt them too. And now they're all meeting in the middle of the night. How do we contain this? How do we get out of this? So, Devin, to your point, what's the likelihood? I would not dare to try to handicap this. It's binary to me at this point. It does or it doesn't keep going. If you look at a stampede out of a concert, if you're up in the upper decks and you're not participating, you're just casually observing, how would you mathematically quantify the odds of it getting worse or getting better? It's almost impossible to do. It's chaos theory. Somebody who's much better at math could probably pull it off. Mish, I bet you're doing the math in your head right now. I guarantee you there's numbers swirling in that man's head right now. Mish, maybe he could pull it off. All right. With the speed with which you figured out the MMRI formula, I know you could figure out a model to at least within a reasonable margin of error quantify the likelihood. I cannot. Mish is ridiculously intelligent, folks.
Well, I think
He gets
the
so
systemic
uncomfortable.
part.
I'm gonna make you red in the face, Mish. Hold on. He gets so
Yeah.
uncomfortable when I talk about how smart he is. He doesn't like it, so we're putting him on the spot. Everybody was like, "Jack, the MMRI video was so great. It was so awesome. How did you think of that?" It took me hours to think of it, and he figured it out in 30 freaking seconds when I told him what I did. 30 seconds. All I did was said, Manarino's formula. I tweaked it, and he fires back. That includes typing time and text message transit time within 30 seconds.
And looking it up.
And you what?
And I had to go look it up.
Yeah. Yeah, that's the other. Yeah. So, whole other level here, folks. What were you going to say, Mish, before I interrupted you?
Well, Devin's asking about the nature of risk, which I'm a big nature of risk kind of guy. But the problem is I keep asking about or talking about payrolls, but here's the risk of this, right? Which is why people are out there screaming, we need someone to buy this bank. 60,000+ companies had money in Silicon Valley, all of their money or a good portion of it. So what happens is that I'm getting a little echo, just so you know.
A little echo for me?
Yep.
All right, I'm going to turn down my volume a little bit. Hopefully that helps it. Go ahead.
Okay, so what we get then is that so these companies have lost all their money. So come Monday morning, they may not even let people come into work. They can't make payroll, they can't pay the electricity, they can't pay the rent, nothing. They have to go out and now get debt in a hard debt environment to just pay their employees. Right? So this is why these screens are happening by Monday. We have to have this figured out because if we don't, we might trigger an asset sell. These companies then have to start selling assets just to make payroll. And that is never in a good position to be in. And we're looking at 60,000 companies. We figure what, 10, 15 per company?
Yeah. Well, let's talk a little bit about the numbers here then. I think I have this up here. I think Unusual Whales tweeted it out. No, not that one. Not that one. We'll get to you guys. Here we go. This is from Watcher Guru. Nearly 50% of all venture capital backed startups in the U.S. had exposure to Silicon Valley Bank. All right. Now, Mish, you were throwing some numbers at me earlier today. 50% of all venture capital startups. What was it? 100? There are 125,000 companies that meet that description of VCS or venture capital backed startup. So they're saying 50%. So we're looking at somewhere around 60,000 companies had their money in this bank. All right. And 93, 96%, whatever the number was of their deposits are in excess of FDIC insured amounts. So that money is right now, the only safe assumption is it's gone. It's best case scenario frozen for months, maybe even years. right? So 60,000 companies. Let's take an average. How many employees per company you think of these 60,000? 50, 100?
So yeah, that's what I was saying. That so there's mostly startups. So you figure 10 to 15. So let's just say 60,000 times 15 on an average. That's about 900,000 people.
Round it up to a cool million, right? So we keep
Round up
the
to a cool million,
numbers.
right? Half
Yeah.
of those people don't get paid. Just half of them. That's 500 million families, or sorry, 500,000 families now without a source of income.
Yeah. And by the way, 500,000, that's about 0.4% unemployment, isn't it? About 160,000 people is 0.1, or maybe it's about 0.3%
It's
unemployment.
0.3%. 4,800 is 0.3%.
So these are pretty conservative estimates because we're assuming half of these companies survive, which venture capital backed startups are usually pretty risky companies to begin with. There's a pretty high rate of attrition here. These usually fail within their first few years. And on top of that, there's probably not going to be any new venture capital backed startups coming in as the next generation, right? And oh, by the way, here I even had this, where is it? In NPR today, Silicon Valley Bank failure could wipe out a whole generation of startups. So we're not going to have new companies coming in to fill the void here. So even the numbers you're saying, Mish, maybe this only results in 500,000 people unemployed. That might be too conservative.
It may be, right? We're trying to keep it a little conservative so we don't go full over the cliff of FUD.
Yep.
But so think of it now. We have 500,000 families, person's a family, right? Maybe alone, whatever, right? The ownership in a house. They all put their stuff up for sale in San Francisco, in Austin, in Miami, Phoenix, right? All these houses go up for sale immediately within probably the next 6 to 8 weeks. So that's kind of what we're looking at as a knock on, right? You have the people don't get paid. People have to put their houses up, right?
People go on unemployment.
It starts that whole kind of ball rolling that if they don't do something, sell the bank, they're not going to bail it out.
Let's keep in mind the state of this industry heading into this crisis, right? The starting point here is not a point of financial health for these companies. We've been talking about tech layoffs every day in these morning updates since January 1st, right? So these companies are already on the brink of layoffs, and now their money's frozen. So again, we're trying to be conservative here. We're trying not to be too fuddy, but I have to just state some of these assumptions we're making that maybe only half of them get laid off. These may not be safe assumptions. This could be a lot worse than even doom and gloom Jack on YouTube is telling you guys. And again, I wear it on my sleeve, guys. Perma bear, all right? I'm not known for my optimism. So take that with a grain of salt. I'm not, generally don't do optimism, all right? I swear I'm an optimistic guy. It's nukes. Mish and I, we're both from nuclear power. That's where we come from. We are trained to see the worst in every situation in order to avoid disaster. That is how we have been trained professionally, and that's why we tend to see the worst in every situation. But I mean, I'm trying to be less fuddy now. I'm acting against the instincts that have been drilled into me in my 15 years in nuclear power, and I'm trying to look at the optimistic side of things, and that's hard. And even the optimistic side of things are pretty bad here. All right. Thank you very much, Devin. So I hope we answered your question there. We went off pretty hard there. Dan Hedin is saying Roku had 600 million in SVB. I saw 480 and change. But I just want to add, Dan, and thank you for that data point and for the support of the channel, by the way, Dan. There's a lot of numbers swirling. Like we saw 209 billion was the number for Silicon Valley Bank's deposits. And then yesterday I saw a tweet that said 163 billion. And I remember saying that's a little hard to rectify those two. Well, because people are pulling their money out of the banks so fast right now, and asset prices are falling so fast right now, these numbers change very quickly. So it's possible Roku had 600 million in SVB, and it's possible they got out 200 billion, but 400 million is still stranded there. Am I using million and billion interchangeably right now? Sometimes the wires get a little crossed, but it's possible 400 million got left behind, and that's the difference. So the numbers change very quickly right now, and I want to emphasize that, guys. We're doing this Saturday live stream that we don't usually do. Things are moving very fast right now. We're in one of those moments where history happens in minutes, and that's why we're doing this out of character Saturday live stream to bring you guys updates about what's going on here. So thank you very much, Dan. I appreciate the super chat, sir. I appreciate the continued support of the channel, everything you do, sir. And where are we? I saw one more in here. Come on. We're going to find it.
It's Teresa. She was the new one.
Oh, we got Peter. Peter first. Peter Frown says EC660 has the right idea. He's hiding under a rock in North Florida. That was EC660's super chat from yesterday. That like Patrick the Starfish, he came out from under his rock, saw that a bank had failed, and he just smacked that snooze bar, went right back to bed, said, nope, we're sitting out the end of the world. You know, I would like to hide under a rock, but I don't have the luxury of rock hiding right now. I run a finance channel, and when things are going wrong in finance, it's time to cancel plans for the weekend and get to work. So that's why we're here, Peter. And yeah, you're right. It's probably better under a rock right now. I wouldn't mind, but yeah, we're canceling a lot of weekend plans right now. So, by the way, thank you, Mish, for being on the stream on Saturday. By the way, appreciate that, and thank you, Goldie, for letting us have him for today. That was nice. And thank you, Peter. Appreciate the super chat, sir, and the support of the channel. And where is it? And thank you, Gigi, by the way, who's alone with the kids right now because Daddy's working on Saturday. Jose Orozco says, have list of bid banks with unrealized losses. BOFA next. I don't think BOFA's next, but I have seen that BOFA's up there pretty big. Real quick, I'm going to give you a couple of names, all right? And it's not, I'm not trying to add a panic. These are the names that are on my radar right now, all right? These are the banks that you need to watch for, and there's a lot of smaller ones that could come out of nowhere, all right? But the first one, the culprit, Signature Bank, all right? Now, their CEO is out making assurances that they are not exposed, that they're strong. Bank CEOs always say that. I'm not saying it's a lie or it isn't a lie. I'm just saying they always say that. They have to say that. His job is to restore calm. So you don't always restore calm by telling the truth, do you? So Signature Bank, they have a lot of crypto exposure. Now, especially now that this thing is going on with USD coin losing its peg, I would say that increases the likelihood of some kind of contagion at Signature Bank. So that's one to watch out for. Ticker SBNY. And then there's some smaller banks, and I keep hearing these three smaller banks mentioned a lot. The first is First Republic Bancorp, ticker symbol FRC. They were down 14.8% yesterday, another 4% after hours. So that's one to keep an eye on. Now, these are smaller banks, market cap of $15 billion, but that's after being down 14 or 15 billion. I think FRC had, I don't have their number, the deposits number. This other one, Western Alliance Bank Corporation, ticker WAL. They have $61.5 billion in deposits, a $5.4 billion market cap. They were down 20% yesterday, another 2.7% after hours. So this is one. Again, they're out trying to restore calm, trying to say, hey, we're okay. We don't have this vulnerability. They may or may not, but these are stocks that are getting crushed right now, so the market sees something here. And the last one I want to mention that should be on your radar is PacWest Bancorp. This is probably the smallest one on the list, market cap of $1.4 billion, but they were down 38% yesterday. All right, bank stock losing 38%, you pay attention to that one. All right. Again, this is the smallest one on the list, but those are the ones that are on my radar right now. Signature, First Republic, Western Alliance, and PacWest. Those are the ones that may or may not be making headlines in the next few days. All right. Thank you very much, Jose. I appreciate the super chat. And by the way, I did see that BOFA did have a lot of unrealized losses from mortgage-backed securities and CMBS, but I have not seen that BOFA, Bank of America, is anywhere in the risk spectrum that some of these smaller names are. If it spreads to Bank of America, we're talking about a whole different ballgame, folks. All right, we're a long way from Bank of America right now. Go ahead, Mitch.
BOFA, JPM, those kind of top 8 banks, their unrealized losses are about 20%. Silicon Valley was in the 60s and 70s. Yeah. Hey, Chris. Chris just showed up. Financial Prepper.
Hey, Chris Taylor from Financial Prepper. What's going on, Chris? Check out Financial Prepper while you're here. By the way, we used to have a gentleman's competition, Chris Taylor and I. We were neck and neck in subscriber count. That is right up until Chris absolutely destroyed me in subscriber count. He has grown like crazy. He is off higher than 40,000 subs right now. I am minor leagues compared to my man, Chris. So, Chris, congratulations, brother. I'm sure I owe you a drink or something for that one next time we get together. By the way, real quick, I want to talk. You mentioned something about hold to maturity or the assets. There's two phrases you're going to hear a lot of in the coming days or you may have already heard, or two acronyms, AFS and HTM. And these are accounting gimmicks. And this is one of the things that played a big role with the silly bank failure, which was Silicon Valley failure. AFS stands for assets for sale. Now, banks buy bonds, they buy mortgage-backed securities, they buy CMBS, commercial mortgage-backed securities, U.S. Treasuries, right? There's two ways they can hold them on their books. They can hold them as AFS or HTM. AFS means assets for sale, which means they put them on their asset balance sheet under the mark-to-market price, basically what they can sell it for today. That's how they count it on their books, right? That's assets for sale. Now, what happened is with interest rates rose so much in 2022 with the Fed tightening, that's why they say the Fed would tighten until they break something. As they raise interest rates, remember bond prices and bond yields are inversely correlated. So as the Fed has been raising interest rates, they have been lowering the value of these assets, of these bonds that were for sale on the bank's balance sheets. All right. So the banks have been moving these assets from the assets for sale column, and they've been moving them over to HTM, or hold to maturity. Now, what that does is that treats the value of the bond, instead of what I can sell it for today, they treat the value of the bond of, if I hold it until it matures 10 years from now, 30 years from now, it would be worth this amount plus all of this interest. All right. Now, that's legal. It's a little sleazy, but it's not illegal to move your bonds from assets for sale to hold to maturity. But there's one big problem. When you're a bank that is having a bank run, you no longer have the luxury of holding those assets to maturity, because your depositors want their money back. So you have no choice but to sell that asset for what it's worth today. So all of a sudden, these hold to maturity assets are not worth anywhere near what you've been saying on your balance sheet, what they're worth. Now you got to mark to market and sell them for what you can get for them today, which is a whole heck of a lot less than the face value of the bond if you hold it to maturity, because interest rates have risen since you bought that bond. That's one of the ways why the Fed tightening is breaking something, because they're driving down the value of bonds. In this case, mortgage bonds, commercial mortgage bonds, and U.S. Treasuries. So that's, you're going to hear assets for sale, AFS, or hold to maturity, HTM, a lot in the coming weeks. That's what's behind that. So thank you, Jose, for that super chat, sir, and for that support of the channel. And again, for the Bucky's Corn Nuggets, my good man. And there's Teresa Wagner. Hello, Teresa. Thank you very much for the support of the channel. She says, where does the money withdrawn go to? Isn't it a closed system? So the money withdrawn is either, it is relatively closed system. The withdrawn money is going either to cash in somebody's mattress. And there's probably a lot of people out there right now are reading about this and saying, maybe I go get $1,000 out of the checking account, just keep it in the safe, or, maybe I keep it in the mattress. Probably a lot of that going on. But the majority of it is going on right now is companies and wealthy individuals are starting accounts at other banks, and they're moving their deposits from bank A to bank B. Now, you wouldn't think that would cause a problem, but remember the way the banks deal with the money. The banks take that money and they buy assets with it. So before Silicon Valley Bank could give the money back to their depositor, they first had to sell those assets to get that money, because the banks don't have the money. The banks have assets. And the act of selling those assets in order to raise the money to give it to their depositors who are withdrawing it, that devalues the assets. It drives the price down. Next thing you know, the bank is insolvent. It doesn't have enough assets to cover all the withdrawals. So where does the money go? Up in smoke. The people who get their money out in time, they're able to go to another bank. The people who don't, that money, poof, up in smoke. It just ceases to exist. And, what was the quote? I got to get the quote. This is the second time I referenced it, and I have to get the quote right. So bear with me while I Google this, folks, because this is an important quote. Henry Ford quote, banking system. All right. It is well enough that people of the nation do not understand our banking and monetary system. He's saying it's a good thing that the average person is ignorant of how the banking and money system works. For if they did, I believe there would be a revolution before tomorrow morning. And if you want to know what's going on in the minds of bank regulators and banking executives right now, and why the Fed moved up that meeting to Monday at morning, this is why. because people are starting to realize how the banking and monetary system works, and they're freaking out. And this is kind of the same quote that we had with that video that was circulating of the FDIC executives who are talking about bail-ins and people don't have a professional need to know and we shouldn't tell them. And if people knew, they would freak out. It was basically this same quote here. It is well enough that people of the nation do not understand our banking and monetary system, for if they did, I believe there would be a revolution before tomorrow morning. Because the fact is, folks, our bank and our money system is all smoke and mirrors. And I'm not trying to stoke a panic here. I'm just trying to inform. This is how it works. All right. There's only about $5 or $6 trillion of paper money in existence. That number could be wrong, but it's ballpark. It's accurate. Okay. It's at least ballpark accurate. But M2 money supply is somewhere around 30 trillion. So if everybody tries to get their money in paper currency at the same time, there's nowhere near enough paper currency in the world to back that up, which means most dollars don't exist. You cannot get your hand on them. They have no mass. They do not exist in the real world. They're illusions created. Now you can still spend them for goods and services. You can still, move them around. As long as everybody doesn't want it at the same time, it keeps working. All right. And we have all these things, all these people that we march out in front of cameras who carefully choose their words to remain calm. We've got this under control. And they use big words like transitory that people don't really understand to make themselves sound more intelligent. So you believe that they're competent enough and that they have this under control, and you don't go get your money. That is the thread that holds up this, what's the sword of Damocles that dangles above our head? All right. Yeah. And that panic is that sword of Damocles. All right. If people realize, if enough people were to understand how fractional reserve banking worked and how our money system, our fiat money system worked, there would be panic today, instantly. Thank God most people don't understand it. So where does the money go? Up in smoke. That money never existed to begin with, Teresa. I mean, that's the cold hard truth of it. It's ephemeral. It doesn't have any physical form. And, a lot of the people who criticize Bitcoin, I don't want to turn this into a crypto debate, but a lot of the people who criticize Bitcoin, if you ask enough questions, if you go deep enough, you can tell that most of the objection to Bitcoin centers around Bitcoin has no mass, that you can't physically go get your Bitcoin. You can't hold it, that it only exists digitally in the ether. And, I'm a big gold guy. I'm a big physical ownership. If you hold it, you own it. That's the only truly safe asset. I tend to be in that camp, but I also like Bitcoin. But you have to realize the dollar is the same way. 99% of all the dollars in the world don't exist. They have no mass. You cannot get them. They're not in a vault anywhere. They are just existing as lines on a spreadsheet, as binary ones and zeros in computer code. So the money never existed to begin with. And when people realize it, it goes up in smoke. That's absurd simplification of it, but that's really how it works, folks. That is our banking system. Dan Hedin is back in the green. He says, if you make 100,000 plus, unemployment does nothing for you. Is that the limit to unemployment benefits?
Well, the unemployment benefits are at most, for most states, I got it, everybody's different, about $400 to $450 a week.
Okay.
And there's a formula and everything else, right? So at a certain point, you just don't make any more money.
And, I just want to mention something, folks. The more people that go on unemployment, keep in mind, unemployment is paid for, with government spending. Government spending is debt spending. Debt spending is inflationary. So as people pile into unemployment ranks, it's an inflationary tendency. It causes more government deficits, more government borrowing. So it debts more money into existence. So now bank collapses are inherently disinflationary. But the fallout from the banking crisis, if more people go on unemployment and we get big government deficits, that's more inflationary. So you got to understand the various forces that are acting on both sides of this equation here. And it's really hard to tell which one is going to win out in the end, which is the stronger force. But you have both inflationary and disinflationary forces at work here right now. My guess is this will be a deflationary event. A lot of money, billions of dollars is going up in smoke right now.
I think this is a deleveraging event. This is
What's that?
deleveraging, I think, which is the next step beyond deflation.
Very well said. Deleveraging. That's exactly what this is. It's a deleveraging. Does it spread? That's the big question. Where does it go from here? Thank you, Jesus Aguilar. Appreciate the super chat of the channel. He says, question, does Varo Bank, Chime Bank have exposure to SVB?
I looked those up, and there is no news of either of those banks having any exposure, but it's a negative news. They didn't come out and said they did, which is actually, in this day and age, a better representation if they just keep their mouth shut.
Okay. So it's not definitive, but there is, by the way, thank you, Mish. That's fantastic that you had the DD done in time for that. Every channel needs a Mish, I'm telling you, man. He's taking a victory lap right now. So thank you, Mish, for that. And keep in mind, Jesus, that just because we do not have positive confirmation at the moment of exposure to SVB does not mean they don't. It just means they have not said that they do. Right. And, let's go back to this tweet from the Kobayashi letter. And again, I'm not trying to cause a panic affecting those institutions. I know nothing about either of those names. All right. But the one thing that the Kobayashi letter said in this tweet, when he's mentioning here are the confirmed exposures to this bank, he said these are only the companies that have disclosed their exposure so far. All right. And if you add up all of these numbers, all these billions and millions, it is nowhere near the 200 billion in deposits that they had at that bank. So there's a lot of companies that have yet to announce their exposure that still have it. So I'm not going to definitively say no to Varo and Chime Bank, but there is no positive confirmation of that at the moment. If that changes, we'll keep an eye on those names. If that changes, we'll mention it in a future live stream because
that goes for Amalgamated. Also, someone else had asked about Amalgamated. Same answer.
Amalgamated is the other one. I'm writing these names now. Man, the banks I did not even know existed before this live stream. All right. Thank you very much, Jesus Aguilar. Appreciate the super chat, sir, and the support of the channel. And, oh, man, we're scrolling through. We're going to get to them. There is EC660 is back in the house, out from under his rock and back on the live stream. Hello, EC660. He said, I got my cash under the same rock I'm under. And just, for no particular reason, what is the address of that rock, EC660? Sorry.
Yeah, between him and Tiggy, I'm trying to get the location of their treasure maps.
Yeah, exactly. If you're in the business of midnight gardening, folks, let's just say, remember where you bury this stuff. Remember where your mattress is if you're going to do that. And if it is in the mattress, don't tell people it's in the mattress. Be smart. And remember, banks are risky. There is a risk in leaving your money in banks. Financial institutions are over-levered. But some dude with a club or some dude with a GUN could also be risky. So, be careful going around advertising, hey, I got all my money out of the bank. I keep all my money in cash at my house. Well, congratulations. You just put a bullseye right on your forehead. So keep that in mind. And thank you very much, EC660, for coming out, getting some vitamin D, enjoying some sunshine. I'm looking up at the sky here. I'm in my office with the windows blocked out, but yeah, it's good to get out from under the rock every now and then. Thank you very much, sir. And we've got options losses. That's a new name. Well, I'm deeply sorry for your options losses. He says, thank you both for all of the info. Much appreciated. Also hit the like button, chat. Outstanding. Wow. He sends a super chat to remind viewers to hit the like button. Man, do I have the best viewers in all of the tubes or what? I mean, that is fantastic. Thank you very much, option losses, you magnificent melon head, both for the algo boost that all those likes will generate and for the support of the channel. You are a gentleman and a scholar. And we are finally caught up, I think.
We are. We're caught up.
Oh, outstanding. All right. We're getting a little long in the tooth, so we're gonna get to a few more things that I had called out here that I wanted to talk about. All right. First off here, this one. We mentioned the crypto thing and the contagion going on in crypto. I saw this one in Cointelegraph this afternoon. Crypto whales suffer huge losses due to USDC depeg and SVB collapse. The depegging of the USDC stablecoin has affected other stablecoins, wreaking havoc on crypto projects and stakeholders in a massive chain reaction. In other words, contagion. Contagion. Check this out. In response to the extraordinary depegging event of the USD coin stablecoins caused by the collapse of the USD coin stablecoin, caused by the collapse of its counterparty, Silicon Valley Bank, crypto whales, guys with a lot of crypto money, have reported severe losses and appear to have embarked on a series of capital flights to protect assets. This is contagion. This is the people on the other side of the stadium, folks, right? This is it spreading. Du Jun, the co-founder of crypto exchange Huobi Global, posted, I dodged Luna. I dodged Three Arrows Capital. I even dodged FTX and their collapse, but I couldn't avoid Silvergate, nor Silicon Valley Bank and USD Coin. Asked a few crypto veterans, losses amounted to more than $1 billion in stock and deposits, myself included. I'm very upset, and it's time to cut down on my budget. This is a crypto billionaire talking about time to cut down on his budget. The same day, blockchain personality and Tron founder Justin Sun reportedly withdrew $82 million in USDC from a decentralized finance protocol, Aave V2, over a series of transactions and swapped from DAI. At the time of publication, 82 million USD coin is worth 75.26 million. And this goes on to list all of these bigwigs in the crypto space trying to get their money out, trying to move it from one platform to another. So this is already spreading within crypto. I don't know if it's going to spread to other banks. I don't know if it's going to spread to other industries outside of venture capital tech startups, but it's already hitting hard in crypto. All right, keep that in mind, folks. Also, something I wanted to talk about. Go ahead, Mish.
Well, I think we need to talk about FDIC, what the FDIC is a little. I don't know if you want to do it after the story or before it.
Go ahead, we can do that.
All right, so FDIC is an insurance company, right, that makes money off of fees, and it puts it in a, for lack of a better word, a trust fund for the banks as they fail. And banks, sometimes we have zero failures in a year. I mean, we haven't had a big failure since the GFC, right?
Yep.
So there is not enough money in that fund to cover more than one, maybe two banks. And then they have to go to Congress to ask for more money because then it's no longer self-funding.
Well, keep in mind, this one collapse, the Signature Valley Bank, on its surface, by itself, I don't think is going to tax the FDIC that much because most of the money. What's that?
About $1 billion is what
about $1 billion.
They can come up with.
They'll be able to cover this. All right, because most of the money was not FDIC insured. The question is if it starts to spread to a lot of smaller regional banks, to a lot of like locals, right? Now you're talking smaller banks. They don't have as much assets, but most of their assets are probably below that FDIC threshold, which means it will tax the FDIC system. So Silicon Valley Bank by itself, yeah, they're going to have to pony up a lot of money, but it's not enough to drain the account yet. If Signature goes to, if Silvergate, which right now Silvergate is not going into FDIC receivership, if they end up in FDIC receivership, right, if the contagion spreads, now we're talking to where, yeah, the FDIC no longer has made enough in fees to cover these payouts, so now they're going hat in hand to the U.S. Treasury. Again, that's inflationary because the U.S. Treasury has to borrow money from the bond market in order to give the money to the FDIC so they can give it to the depositors. In other words,
and we're not borrowing right now. So there are some political ramifications that we are at our debt ceiling right when this is happening.
Wow, I never even thought of that, Mish. That was a fantastic. Yeah. Wow.
So the laws that we'll have to jump through the hoops to get there, we got to change Dodd. We got to get a new law. We've got to top the debt limit off. We've got to agree to get more money to the FDIC. There's all these major laws that would have to line up and get done in 2 weeks?
Yeah. So what Mish is talking about right now, like let's look at the Treasury General Account, because if the FDIC can't cover the expenses, it goes to the Treasury. They have to borrow it from the Treasury. And let me just bring up the Treasury General Account right now. Here we go. Treasury General Account. The U.S. Treasury only has $330 billion. That is Uncle Sam's checking account. That's all they have left. Let me zoom in on this chart a little bit here. All right, here. This is Uncle Sam's checking account, $333 billion. That is for the military, for all the money to Ukraine, for everything, right? For entitlement programs, Social Security, all of it. If the FDIC runs dry because this collapse spreads, the FDIC needs to borrow money from the Treasury in order to pay out people their insurance on their banks. Well, that's going to speed up the decline of the Treasury General Account. And when the Treasury General account hits zero, which we're heading that way, they have to borrow more money. Well, right now they can't borrow more money because they're up against the debt ceiling, which means what Mish is saying, if this spreads, this could move forward, significantly move up the timetable for the debt ceiling debate. And a lot of people are out there saying, yeah, they're just going to end up raising the debt ceiling. We know they're going to end up raising the debt ceiling. And you know what? You're probably right, guys. That's probably what's going to happen. But there's a non-zero chance that they don't. Right? There is a very slight chance that the politicians just become so unbearable and so unable to talk to each other that they just drop. They drop the ball and we default on the debts. We default. Imagine if the U.S. government goes into default while banks are already collapsing. Like now I'm catastrophizing a little bit here. But again, nukes. Mish and I both nukes. We are trained to see the worst possible outcome here. Wow, I never even thought that the debt ceiling debate could come into play here. And you're absolutely right, Mish. This could move up the timetable. And, we could have an emergency session of Congress in the middle of the night where they raise the debt ceiling just to be able to borrow enough money to be able to pay out the FDIC to pay people their insured deposits. Also, part of that whole sequence of events, the bond market probably will not have enough liquidity to buy all those treasuries that the Treasury will have to issue in order to borrow that money. So that could also see the Federal Reserve in the middle of the night resume quantitative easing, printing money to buy those treasuries.
It takes 3 days in each House of Congress to pass a bill, and then 1 day for Biden to sign it.
So you're looking at a minimum
because of procedural requirements.
Wow. So now, I guess now the moving up of this Fed meeting kind of makes sense right now. They need to nip this thing in the bud. They've got to stop this before it spirals. So we may be about to see the Fed pivot. Wow. Awesome. Good stuff, Mish. That was good.
Yeah.
All right. I want to talk a little bit here. Silicon Valley Bank executives. This is Unusual Whales tweeted this one out. Let me know if any of this rubs you the wrong way. Silicon Valley Bank CEO Gregory Becker sold 11% of his stock on February 27th, 2023 in Silicon Valley Bank, several $1 million in stock. Their general counsel sold 19% of his stock on February 5th. The CFO sold 32% of his stock on February 27th. The CMO sold 25% of his stock on February 1st. Isn't it comforting to know that these bank executives sold their stocks ahead of this collapse? You got to pay attention to insider trades, folks. Whatever company you're in, whatever stock you're in, you got to watch what the insiders are doing. If you were watching that one closely, you would have got out ahead of this and you would have saved yourself a lot of pain if you're a shareholder in this bank. Or if you listened to Jim Cramer a month ago talking about how SIVB was such a great steal at this level, you could have very easily gone in and checked the SEC filings and said, why is the CEO, CFO, general counsel, and CMO dumping their stock then? Booyah, Jimmy. So got to pay attention to what the insiders are doing. Also, I saw this one on Twitter today. Who tweeted this out? This is Samson Mao. I hate to talk about this guy. Sorry, I'm not the president of the Samson Mao fan club. But this video was going out from Cointelegraph. This is showing people outside of a Signature Valley Bank in California lined up to get their money out. So I hate to see this. These people don't deserve this. This is people's savings. This is lives being ruined, what we're watching in this video right now. And this is why, even you perma bears like me out there and you doomers and gloomers, there is a tendency, there is a desire to take a victory lap on this one, to say, I told you so. You got to remember the human element in this, that this is people's lives coming undone right now. So got to try to, contain your enthusiasm. Remember the scene in The Big Short with Brad Pitt saying, just don't dance. That's what that is. That's why I brought that one up. You got to remember there are human stories behind all this, guys. It's not just numbers. It's not just charts. We already showed this one. Okay, last one. This is the last one I'm going to talk about today.
I think it's important to note that the margin call, we're at the discussion where they're talking about the music stopped versus the music slowed. I think we're past slowing, and we're getting real close to stop.
For these people right here, this music has stopped. Absolutely. These are people lined up just trying to get anything they can out of their bank that just failed. And, I don't know how this ended. I don't know the context. Did these people get their money out? Were the doors locked? Were they closed? I heard there were police, NYPD, in front of Silicon Valley Bank in New York City yesterday. I don't see any of that here, but, this is...
but the cops were there. There weren't tanks, but there were cops.
Yeah, no tanks. Oh, yeah. We can't talk about that. That's another thing that'll get me in trouble with the algorithm. The tanks at the China bank, right? Uh-oh. Don't say anything bad about China. Anyways, this is the beginning of It's a Wonderful Life, right? This is the people trying to get their money out. So I'm not going to do my Jimmy Stewart impression again. I already did it. Sorry. Got it. It's a minimum 1 week gap between Jimmy Stewart impressions. All right. Want to talk about this story, all right? And I'm not going to read this tweet. I have not read this tweet, but I saw this, and this makes my blood boil, all right? This is Bill Ackman, hedge fund schmuck extraordinaire, all right? And don't read it. Don't pay attention to what this man says, okay? But I can tell you what he's saying. He's saying government get in front of this, bail them out, everything, all right? What he is doing here, I have seen this play from Bill Ackman before. And one of the reasons why I hate the traditional finance press with such a passion is because of this guy, Bill Ackman, all right? And I hope to God they make a movie about this someday. This man, I'm probably going to get myself in trouble, whatever. Probably, arguably, one of the biggest crooks in history, all right? March 23rd-ish, 21st, at the height of the pandemic panic in markets, this guy goes on CNBC, and he says, hell is coming. And he says, they need to shut down the whole world economy, close it all. He starts listing stocks, travel stocks, hotel stocks. He says all of these stocks are going to zero if the government doesn't get their handle on this. All right. This was on CNBC, live on the air. He said this over the phone. Go on YouTube. You'll find the clip. All right. What Bill Ackman did not say while he was on TV saying all these stocks are going to zero was that his hedge fund was buying them hand over fist. So this guy goes on TV and he stirs up a panic. Do you see me? You see my teeth right now? Do you see the veins sticking out of my head? All right, watch out for these snakes. He goes on TV and he stirs retail into a panic, and he convinces retail to sell all their stocks at a massive loss to themselves while his hedge fund is buying them. He used CNBC to create a supply of something at a low price that he wanted to buy. And a few days later, he filed the 10K that his fund had made billions of dollars on those stocks that rebounded quickly off of the bottom. I mean, you could time this. This was almost to the hour, the bottom of the pandemic, when he did this interview. And Bill Ackman, off of that trade, off of going on CNBC and convincing you, the retail trader, to dump your stocks at a loss to yourself, and then him buying them up. He didn't tell you he was buying them. He told you they were going to zero while he was buying them. He made more money off of that trade than all of the big shorts combined made in the global financial crisis. Do not listen to this man. He is on Twitter right now, stirring up a panic, trying to make this worse. I think he made so much money off the pandemic that he's trying to make it worse so he can buy it up for pennies on the dollar. All right, and I saw this. I read like 2 lines into it, and I stopped reading, and I just got so mad. Maybe he's right. Maybe he's wrong. But this guy has an agenda, okay? And CNBC will still have him on the air day in and day out on an almost weekly basis. They'll still have Bill Ackman on the air, even though Bill Ackman made billions of dollars off of CNBC's viewers. They still bring him on the air, and that is why I cannot stand the traditional finance press. They never disclose. Are they shopping their book? Are they advertising the other side of a trade they're taking? You never know where they stand, and they're never forced to disclose it until after the fact, until after it's done. This guy siphoned billions from retail traders, and CNBC was the mechanism of that theft. All right? So that's why I'm bringing up this tweet from Bill Ackman right now, and I quote tweeted it, and I said this whole rant on there. Heed this man's warnings at your peril, folks. And you just got to be careful of these guys. They don't always disclose where their interests lie. All right? So I apologize for my veins sticking out and the redness in my head and everything. I think I caught up everybody, right? I didn't miss anybody in the chats. Did I miss? All right.
Yep, I agree.
All right, guys. We've been going for an hour and a half. I apologize for the length of the stream, but again, like we're watching history happen in minutes here right now. So that's why I wanted to call this one on Saturday. I don't usually do this. If you guys are new to the channel, every morning I do a quick live stream, a 10 to 15-minute morning update. We go through the indexes and the bond markets and commodities. And then once a week on Friday afternoons, we get together. We do a longer form live stream. And of course, I do my regular videos. But if you ever see me go spontaneously live in the middle of the day, it means something big is happening. I rarely do that. And I saw what was going on with USDC this morning. I saw that emergency Fed meeting that they're calling Monday morning. And I said, whoa, this is big. This warrants a live stream. So we did this one. So, Miss, you got anything you want to add?
Yeah, I think there's a good point to talk about here is that between Bear Stearns and Lehman, and I don't know who went first, but there's 13 months.
Yeah.
And this crash can arguably have started back on 3AC in June. So we got a couple more months to go here. Think about it. If we could have covered the dot-com bubble or the GFC via YouTube, it would have been a totally different world, right? People would have been a lot more, knew a lot more about it, right? So I think it's great being in this today that we can sit here and talk about it. And you just got one more super chat.
Yeah, that's a great point, guys. A lot of people after the Bear Stearns collapsed, and then 2 days went by and nothing else awful happened. A lot of people said the bottom is in, the worst is behind us. I don't know if it was 13 months. It was like it was a year plus between Bear Stearns collapse and Lehman Brothers collapse. All right, so just because history is happening fast right now does not mean history ends Monday morning after this Fed meeting. Okay, so a lot could happen, and this is going to play out over weeks, months, maybe even years. Right? We're still learning about the FTX fallout, and that was back in November. Now this one, probably going to be more before this is all said and done. And thank you, Mr. Mike, for sneaking in that super chat at the end there. He says, tinfoil hat on. Okay, tinfoil hat on. All of this is unfolding around the same time. Ripple and their lawsuit is wrapping up. Keywords patented on-demand liquidity. Coincidence. So many connections, partnership with banks all over the world. Are we, when you say Ripple, are you saying this is CBDC related, Mike? Is that?
He is. There's been a lot of discussion in the chat about this is the opening salvo to the CBDC, whatever it is, right? I always screw that up. But we had them come out in late December, early January, said, hey, we are going to test this. They did a small test. They have another big test in June. So the coincidality of this, that's probably not a word, but large number theory says there's no such thing as a coincidence, but when it's too
convenient.
Yeah.
First you create the crisis, and then you offer the solution, which was your goal all along, right? And look, Mike, first of all, I compliment you on your fashion choice of the tinfoil hat. By the way, I got to get hats made. I need an embroidered hat that just says tinfoil.
Hey, everybody bug him about March. I'm on him about March twice a month.
I just want a black hat and it just says tinfoil on it. That's all. That's what I want to do. Like, just enough said. It's 2020s, folks. Let's not put anything past they. All right? And if you know me, I speak of they all the time. These elite people that exist above the state that really pull the strings connected to all of us. All right? And they do move us around like pieces on a chessboard. It is 2020. Let's not say what they would or would not do, because we've seen they do some pretty awful things in the last few years. Let's not try to handicap what they would or wouldn't do. And so is it a coincidence? Maybe, maybe not. And I think it's irrelevant whether it's a coincidence or not, because they will try to push CBDCs on us. Abso-freaking-lutely they will. And I've been saying it for a while now on this channel. Resist central bank digital currencies with every fiber of your being. All right? And should you ever find yourself in a position to ask a question of a politician or of anybody at any level, what is your opinion on central bank digital currency? Get these people on the record about it, hold their feet to the fire, and never, ever cast any vote for anyone who supports central bank digital currencies at any level of government, whether it be state, local, municipal. I don't care if it's the freaking homeowners association of your condo. If they're in favor of CBDCs, vote the bums out. Get rid of them. By the way, never live in a place with a homeowners association. Oh, my God. The libertarian's worst nightmare. An HOA. Thank you very much, Mike. Very insightful comment. Compliments on the tinfoil hat, sir. And thank you, of course, for the super chat and support of the channel. Guys, thank you so much for all the super chats. Thank you for supporting the channel. I really appreciate that. Thank you for spending your Saturday afternoon with us. Shout out to my folks in Discord for the intel gathering and the recon work. Thank you to my Patreon supporters for everything you guys do to support the channel. There is a link down below should you feel so inclined. Thank you to Mish and my Blue Wrenches. And hi, Mom. Hi, Dad. I love you guys. Until next time, everybody, live small and dream big.